All right, good afternoon, everybody. My name is Stephen Warhofton. Very nice of you all to join us today. So I'm here for the fireside chat with CEO of Bolt, Ryan Breslow. And how about we just start off with just giving an overview on yourself, a little bit more about the company, and just a general background on what Bolt does. And yeah, how about we just start there?
Sure. Thanks for having me here, Steven. I'm Ryan Breslow, founder and CEO of Bolt. I started Bolt when I was 19, so that was 12 years ago. So this has been, 100% of my adult life. Started out of college, was at Stanford doing computer science, so Stanford computer science dropout. Actually started the Stanford Bitcoin group in 2013 and dropped out to build a Coinbase type company. Couple banks decided to with Coinbase versus us. We kind of came in second, which was last. And I had this idea around, getting all of the shoppers through a new wallet network powered by a checkout experience. So kind of think like a PayPal 2.0. And that became the birth of Bolt, and have been building Bolt for the last 12 years. It's been a journey of a lot of ups, a lot of downs. Recently took back over the company in February after a 3-year struggle for control. And this year has been an amazing year.
All right, thank you for that. So how about we dive a little bit more into kind of the company's core competencies? What's it really going after? What's the strategy that you've been implementing, especially as you just took the role back? So congrats on that. But how about you give us a little bit more about the strategy?
Yeah, well, the great thing about stepping away for a little bit, while we did lose some time, in my opinion, was I got a lot of clarity as to what we shouldn't be doing and what we should be doing and who we really are. And so what Bolt does is we have a checkout and payments platform, the closest analog being a Stripe. We provide a whole host of digital payment offerings for e-commerce, e-ticketing, esports, gaming, marketplaces, payouts. But the key differentiator, in addition to some product differentiation and pricing differentiation, is that it's deeply integrated into our Bolt shopper network. So any merchant who's using our payment flows, at the end of the payment flow, there's a checkbox that says enroll in a Bolt account for faster future purchases. So we will give business owners amazing technology, very low cost, great support, but they have to deeply integrate with our wallet network. Now, they also benefit from this wallet network. So if you go on any of Bolt's partner brand sites, from a Revolve to a luckybrand.com to you name it, as you start typing in your email into checkout, if we recognize your account, we automatically log you in for a one-click experience. We have over 80 million users enrolled into this one-click experience. So we have about half of all active shoppers in the US on the Bolt shopper network. And so we're quickly advancing. We're about halfway in terms of our mission of ending guest checkout on the internet. Bolt checkout is different from a typical alternate payment method like a PayPal, Apple Pay, Google Pay, etc., because we run the checkout experience end to end, meaning we're not another button. So we call that the NASCAR effect of buttons when you go on websites and you see all of those different button options. We don't operate in that way. We operate as the core checkout. And actually, the alternate payment methods are within our checkout experience. So if we recognize your email, we automatically log you in. If we don't recognize you and you get through our checkout, then we give you that enrollment option to enroll in the Bolt account. So merchants become our flywheel for user adoption, and it's this amazing network effect that takes off from there.
Okay, great. So you mentioned a little bit about how you're very similar to a Stripe or even kind of like a Shopify per se, because it's an end-to-end integrated platform. How do you differentiate yourself from these other organizations that are kind of going after the same end goal?
Yeah, we're kind of the exact middle ground between a Shopify and a Stripe. So we are, look at us as like the bottom half of the funnel of Shopify, meaning we don't power the site or the shopping cart or the themes of the website, but everything from a user's intent to authenticate and checkout we power. So we have Bolt SSO, which powers login. We've got our checkout. We have our post checkout. We have our payment platform, our fraud detection platform, upsells within checkout, and hundreds of different features and functionality. And we support 500 plus different integrations that come bolted onto checkout with one click, from tax providers to shipping, coupons, discounts, loyalty, gift certificates, shopping carts, ERP, OMS systems. So we're the only formidable independent checkout platform. Stripe has tried to compete with us with Stripe Checkout, which is definitely getting traction in digital goods checkout. They power, X.com subscriptions and ChatGPT subscriptions. These are thinner checkout experiences because there's no product being shipped. There's no inventory management system or ERP system or, order tracking or inventory. So they don't really handle e-commerce checkouts. That's where it gets 10 to 100 times more complex. That's where we are undeniably the dominant player as far as our checkout business goes. However, we are now expanding into digital goods and virtual goods and marketplaces and platforms and SaaS companies. And since my return, we've built out the platform to support all those use cases and have landed a host of customers in those new modalities.
Okay, got it. And that makes a lot of sense. And then one thing that you did mention was the fact that you're really going after this kind of one-click checkout marketplace. But has anything changed with the actual economics, with the pricing, especially when you include anything like fraud rates, you're including any sort of authorization cost shifts? Are you seeing any sort of change from an economic perspective?
We rolled out radical new pricing when I took back over. It's something I wanted to do 3 or 4 years ago and faced a lot of backlash with certain investors, etc. But I finally decided to stick to my guns and do it. So we rolled out what we call network-based pricing. There's a great article on Axios about it, which is we actually give the payment processing away for effectively no margin, and many of our products away at effectively no margin, and we only charge for the network. So if we can log somebody in at the beginning of your checkout by recognizing their email, sending them the one-time code and logging them in, those users have a 50% higher conversion rate, a 15% higher repeat customer rate, and we charge you about 1.35%, which is pure margin for us on just those transactions. So the more our network grows, the more profitable our business becomes. So it creates a business model network effect inside of our company. Now, one thing I'll mention before we get too deep in the weeds on our B2B business is the ultimate goal of Bolt is the Bolt Everything app, the Bolt SuperApp. We have had this in every one of our decks effectively since our seed round, which is an end-to-end consumer app that puts all of your financial products into one location, which is how Europe works and much of Africa works and Asia works and even Central America works. There's been this proliferation of financial super apps where there's an obvious need to consolidate financial services for the consumers into one app. And so we've now launched that. The Bolt Finance and Crypto Super App is now live on Android and iOS app stores. And we haven't pushed it to all of our users yet. It's just been friends and family and a LinkedIn post, thousands of users as we iron out the kinks and make it scalable. But this app is the only app like it in the US. It has mobile banking, rewards, peer-to-peer with fiat, peer-to-peer with crypto, AI shopping, a financial tracking, crypto trading, soon to be stock trading, all in one app. So all eyes for us are just to zoom out 1,000 feet, make the payments business go big, get a ton of users and push the users onto the super app. And the super app is really where we intend to monetize. The payments business is a Trojan horse for our super app. And we've always wanted to build this super app, almost launched it a few years ago before we went through our tough times. And now it's live and in market. And we think we're the first to market with a US-based super app.
Okay, that's a very intriguing idea. And then I just have a quick follow-up for the super app, because one of the big questions around kind of the centralized finance idea is around data protection for each individual consumer for all these end markets. So what kind of mechanisms do you have in place for data protection and making sure that there's no potential leakage of any sort of data outside of that super app and outside of the Bolt ecosystem?
Yeah, I mean, Bolt has operated for 12 years, storing sensitive PII with no data leakage, with a very sophisticated security team. We've always hired tier one engineers out of Amazon, Facebook, Google, the world's leading financial institutions. So we bring tier one technical and security talent to our platform. We always have. That's what we've been known for, is our technical execution. We've had no data leak issues since its inception. We're PCI level 1 certified, in addition to a host of other certifications and audits that we're subject to as a financial institution. And so we know how to store data securely. It's one of our strengths. And consumers, we think, don't want to have their data in a million different places. And that's unfortunately the way e-commerce works today. You're storing your data with every new e-commerce brand. And that's the way fintech works today. Every new fintech product that you want to sign up for as a consumer, you've got to go through a whole separate application. If you want to go start crypto trading on Coinbase, you got to give them all of your info. If you want to open a bank account, you got to give them all of your info through a whole separate application. If you want to, start doing peer-to-peer, right? And the list goes on. So And the opportunity with Bolt that we have is a single account with all of your financial products made available through that single account. We have all of the information for a bank level application from checkout. From checkout, we have your shipping address, your billing address, a card on file, name, verified email, verified phone number. There have been products that have been shipped to you that haven't resulted in fraud. And through different data partners that we work with, that data can be used to reverse lookup credit history, address history, SSN, et cetera, et cetera. So from checkout, we have an entire financial KYC application that with very little to no incremental information, we can enable a full mobile bank account for you, stock trading capabilities, crypto trading capabilities. So the US, I think, was so sophisticated at fintech 1.0 that everyone else leapfrogged us to the next obvious conclusion, which is this should all be in one app. But we got leapfrogged, right? Which is a common effect for advanced nations. The less advanced ones are able to leapfrog them, and as we stay stuck in our ways. So Bolt intends to deliver the future to the United States, which is the US's first and winning fintech super app.
Okay, got it. And then just to touch specifically on some of the competitive landscape, because it's still a very competitive space when you're talking about the e-commerce space. So where is the company seeing the most defensible traction versus the rest of the industry?
Listen, a lot of our payment on the B2B side of our business, a lot of our bets that I made stepping back in are paying off. We launched self-service. We have a lot of self-service business coming in. We launched Bolt Connect. Bolt Connect is a huge win for us. We are signing up customers left and right, winning deals against the 800-pound gorilla in the room that starts with S. There's actually two of them. And then we're winning deals against them on a weekly basis at this point through Bolt Connect. Bolt subscriptions. Subscriptions is becoming a very dominant form factor, especially with the proliferation of AI companies charging subscriptions for their products. And we're offering subscriptions at no added cost. Subscription companies are paying 3.5 to 4% all in with the existing solution. So we just signed a deal with a major mobile app platform that hosts 5,000 different mobile apps, including many popular mobile apps. We're getting a lot of traction in gaming. So Bolt Checkout is going to be everywhere. We're stopping at nothing. We're investing heavily in our tech, heavily in our go-to-market. And it's been a lot of upfront work to make our solutions robust, but now our solutions are quite robust. We've always been landing great customers in e-commerce, but now we're landing some really great customers in all of these other applications.
Okay, great. And then just shifting over to your customers, because it seems like you're really generating a lot of traction. So what sectors are you primarily focused on, and where are you seeing kind of the fastest adoption? Is it SMBs? Is it mid-market, enterprise? What specific sectors stand out? So can you just dive into the customer base a little bit?
Yeah, in terms of customers that you can see live today, we've done very well in terms of retail, digital retail, e-commerce. So you can see Bolt on Lucky Brand, you can see Bolt on Revolve, and a few of the other large brand groups have given us commits recently as well to go live with us. Our strength, once again, in retail is very strong. We're the only game in town. No one can really service a checkout, end-to-end checkout experience like we can. But you're going to see Bolt on a lot of mobile apps, on a lot of games, on a lot of SaaS business workflows very soon.
Okay, got it. And then there's no sort of impact from a macro standpoint. There's nothing in like a macro environment that's going to potentially impact the business. Can you talk a little bit more about how the constantly changing macro backdrop can impact the business if there is any impact?
When I think about the macro backdrop, I think more about our SuperApp. Our checkout business is extremely diversified now, and sales are always going to take place online. And if physical world sales are moving online at a double-digit % year over year. So macro, we're in a great position there. But the American consumer is really struggling. The vast majority of Americans are living paycheck to paycheck. I read somewhere recently that even people making upwards of 300,000, 400,000 a year in America, the 60 or 70% of them are still living paycheck to paycheck. So what Americans are struggling with is a debt crisis, is a spend crisis. Americans have a very tough time getting a grip on their finances. You have too many different apps, too much different reporting. It's very hard to get control of your finances. And this is what we want to use Bolt for, to help the American consumer, help the 99%. We have this unbelievable financial tracker in our app that I use personally every single day, which is I can link all of my accounts and see all of my spend, trend lines, categorization, all my transactions synced between multiple different accounts. It's powered by one of Plaid's products. And you can see all of that in one dashboard on a mobile app, which doesn't really exist in the market today. So even that feature alone, right? Let alone what we're launching is a loans marketplace to let people get loans, investment marketplace, trading. So we give people a way to get capital if they need it, make investments, track their finances. And unlike a lot of other apps, which are just trying to feed people loans, lending and loans and cash advance is the number one way all of the financial apps that you probably know of today are making money. Instead of us just focusing on getting people loans, we're going to give them all of the different tools to get out of debt and take back control of their money, which, talking about macro, is needed now more than ever.
Understood. And you're really going after a very much needed problem for the American people. So we do appreciate that. So when we're talking about like 5-10 years down the line, is it all the focus going to be on the full development of this super app, or what are some of the other priorities that you're really focused on over the next 5 to 10 years?
It's a very simple two-part focus: our payments business and our super app. We're investing aggressively, heavily, and equally into both. We have an all-in team, a small but mighty 160 people who are working nights and weekends. A lot of my best friends have joined the company. We're beating offers. Folks have joined us instead of Meta, instead of OpenAI. We've hired folks from Affirm and from Klarna who sit down with us. We have an unbelievable CTO, Jem Yildirim, who is ex-Uber's money team and Amazon and JP Morgan. And he has a huge network that he's bringing over to us. And people are joining us because they believe that we can deliver something that they've been thinking about probably their whole career in fintech. It's already out there. It's already built, right? You can go use it today. Search Bolt SuperApp or Bolt Finance in the App Store. It's already live. It's working, has an unbelievable amount of functionality, right? So it's not just a pipe dream. And we have the users. We haven't started emailing or texting or marketing to our users yet. We will soon once the app is dialed in a little bit more. But we're there. We've got the users. We've got the technology. It's live. It's moving real money. And so this isn't just an idea. And you don't need a crystal ball to see that this is where we're heading. Europe is there already with Revolut. Asia is already there with WeChat Pay and Alipay and Line Messenger, and the list goes on. Africa is there. Much of Central South America is there. But the U.S. is a holy grail market. Revolut is $75 billion company. The American consumer spends 40% more than the average European consumer, right? So everyone is trying to go after this. From Elon with X Money, Meta's trying to do this forever. Apple's been trying to do this forever. That said, we don't think a social network is going to deliver on this. We think in the US, it's going to take a fintech native company that knows how to deliver very difficult financial products in a seamless way, in a way that feels like a single click. That's our specialty at Bolt. And we have the users. If you didn't have the users, this thing would cost you $1 billion to make in years, 3-4 years. So even if someone says, I want to start building this today, a big company, like some of the 800-pound gorillas, right? It'd take them 3 years to get to market, billions of dollars spent. And even after they got to market, they need to have the users, right? Which would also be billions and billions. So we've been building the user network over the last 12 years. We just had 250,000 new users sign up for Bolt accounts just last week alone with the holidays. Even non-holiday weeks, we're getting between 50 and 100,000 users signing up for Bolt accounts just in the checkout experience. So we have free CAC. Revolut last year spent $600 million in consumer marketing dollars alone to acquire about 8 million users. Chime spent $1.5 billion last year just in consumer marketing dollars to acquire a similar number of users. We acquired more users, spent zero in CAC. It's our checkout business and the enrollment there that's getting us the users. Now this is a conversion story for us. It's not a go-get. We don't have to get the users, but we have to convert them. Right now, they're shopper accounts. We do have to convert them to app users. But out of 85 roughly million users, if we convert 5 million of them, right, which is about 6.5% or so of our users, which we think is very achievable, and we achieve $100 in ARPU, which We think is very achievable. All the major fintechs in the US are close to 100. Some are closer to 200. We think as a super app, we can be 3, 4, 500. But let's say we get to a modest $100 at ARPU, 5 million users. That's a $500 million run rate business. We believe we can be there in 12 months. We have the tech. We have the users. We believe our payments business can be at, right now it's 40-ish, can be at 350 million in run rate. So you're talking about $850 million run rate combined business in the next 12 months. We think we're a $40 billion company in the next 12 months. And we think all of this is very achievable. It's right in front of us. It's a conversion story, not an acquisition story. And we think we have every right to win the super app race.
Yeah, I'm really looking forward to keeping up to date with everything that's happening in the Bolt ecosystem. I know that we're out of time, but Ryan, I really do appreciate the conversation. Thank you so much for joining us for this conference. And yeah, we'll hopefully stay in touch. And thank you again.
Thanks so much, Steven.
All right, have a good one.